It's there. All right, finally, we are here. We are back. How are you guys doing? How was your week, everyone? Did you have a fabulous week? Huh? Did you have a fabulous week? Let's see. What can I do? Filter. Transform. Yes, there we go. Alright, good evening and welcome to my live. I'm super amped and super excited for today because you know what? Today we are going to learn about trading and investing. So if you've never traded or you've never invested money and you want to, then that's a good idea that you do. So before we get into that, I just want to say I hope you guys are ready. Hope you grab yourself a pen and a paper because we've got some info for you tonight. So let's log in to my screen. Yeah. Okay. There we go. Let us start. Nice. Investing versus trading. Two different games. Now, I don't know about you, but maybe some of you have thought that investing and trading were the exact same thing. But they are two different things. And a lot of people actually get them confused. All right, so let's learn about these two aspects, investing and trading. So, investing versus trading. Two different games. Understanding the fundamental differences between investing and trading is essential for financial success, while investing focuses on long-term growth. So you put your money somewhere for a long time and then you see the interest and it grows and grows, right? Then it is more stable. It is not as risky as trading. Trading involves short-term strategies and quick decision making that can lead to higher risks and potential rewards. Okay, then are you actually investing or are you secretly trading? Let us see. So what do you guys think you're doing? Are you trading or are you investing or you're doing neither? You're not doing any of them because it's all too risky to do, right? So let's have a look. Many individuals believe they are investing when in reality they are engaging in short-term trading. This confusion can lead to significant financial losses as the strategies and mindsets required for each are fundamentally different. They're fundamentally different, right? Now, what is investing? Let us take a look. Long-term mindsets. So let's make this smaller so you can see. Yeah, let's make this smaller so you can see. There you go. All right, so long-term mindset. Investing is a commitment to a long-term growth strategy, typically spanning for months to years. This approach allows you to build wealth patiently rather than seeking immediate returns. All right, belief in an asset or a business. So that's when, if you're investing in companies, that's where you're investing in stocks. So that's what you would believe in, the stock. Or even if you believe in crypto, that's where you have belief in a certain coin or a certain investment, right? Or maybe in metals like gold and silver. So you invest in those different places. Investors believe in the understanding value of an asset or business. This belief drives decisions to hold positions for an extended period, banking on companies' potential to grow. Now, ignore short-term price noise. Investing involves ignoring the daily price fluctuations instead of reacting to short-term market noise, investors maintain a steady approach, focusing on the long-term growth of their assets, not the short-term growth of their assets. Okay. Example is the buy and hold. So you buy an asset and then you hold it for a long time. Whether it goes up, and then it goes down, or it goes up, or it goes down. You buy and you hold it. A classic example of investing is purchasing Bitcoin, BTC, or Ethereum, or even index funds, and holding them for extended periods as their value appreciates. Alright, so now that we've discussed basically what is investing, I hope you guys are getting on the same page and starting to understand that investing is looking at the long term. You know, so like sometimes, I don't know how many of you have seen the Bitcoin market lately, but it goes up and now it is going down and down and down and down and down and down. I think the last time I saw it was $60,000. And so I have bought Bitcoin for about 6 years now, and I've seen it go up and I've seen it come down and I've seen it go up. So I have faith that Bitcoin will go up again. But this, all that I'm talking about tonight, is not financial advice. This is just information. All right, let's carry on with what is trading. So trading is more of a short-term mindset, minutes to weeks, not years like investing. Trading is defined by a short-term mindset, often encompassing time frames from mere minutes to a few weeks. Traders aim to capitalize on price movements, making quick decisions based on market conditions. They focus on the price movement and the timing. Traders closely monitor price movements to identify entries and exit points. Timing is crucial as they seek to buy low and sell highs, often relying on technical analysis and market trends. Now, profit comes from volatility, the volatility of the market. Traders can profit from market volatility by taking advantage of price fluctuations. They often utilize strategies like breakouts, where stock price moves above resistance, or pullbacks, where prices retreat before continuing the upward trend. So later we will discuss about different strategies and how traders actually place trades and what is the best thing and the ways to do it. Then an example would be breakouts and pullbacks. Breakouts and pullbacks. Common strategies among traders include identifying breakouts where prices rise significantly and pullbacks where prices temporarily retreat before continuing to increase. These strategies require keen market insight and quick decision making. All right, so you need to be quick. So if we have a look here at this image, we have a picture of a breakout. So maybe this is a resistance level where it might have hit a couple of times and gone back. It hit, it came down, it hit, and then it went through with a strong price surge, okay? And then it went on to make a new high. So that's what it basically happens. So you see it tapped on the line of support, of resistance, and then it went through and then came under it, and then it broke again. So sometimes the resistance level changes, it becomes support, and then support can become resistance. All right, so it changes varying on where the market's direction is going. Now, Investing is like planting a tree. It takes time, care, and patience for it to grow and bear fruit over the years. Trading is like surfing waves. It's about catching the right opportunity quickly, riding the momentum, and adapting to the ever-changing tides of the market. Investing is like planting a tree, and trading is like surfing waves. So if you like planting a tree and then just waiting for it to grow, which is also the less riskier way to make money, is when you invest, because you can make your decisions off the market. So when you see it goes down, you can buy, or when it goes down, you can sell. But that's only when you're trading. You're able to buy and sell when you're trading, but when you're investing, you can only buy. All right, you can only buy. When you sell, you take out your profits, and that's what you sell when you're selling for investing. Where in selling for trading, you can still make money. All right, let's carry on. So now, side-by-side comparison. Need to make my video smaller again. All right, side-by-side comparison. Okay, so I don't know if you know, this is Warren Buffett. He is one of the richest investors in the whole wide world. All right, so he knows what he's talking about. So if you have any time, go and check him out. He is really, really awesome to listen to, and he is super, super wise on investing. So investing, a long-term journey. Investing is characterized by a long-term approach where individuals focus on building wealth gradually over time. It involves less stress, as an investor tends to ignore short-term market fluctuations, emphasizing the importance of patience and thorough research. With diversified portfolios, investing generally presents a lower risk, showing individuals to weather the market is volatility more effectively. Ooh, we have to move this one as well, make it smaller so we can read this. All right, trading, a short-term game. Yes, we're surfing the waves, right? We are surfing the waves. In contrast, trading revolves around a short-term mindset where participants aim to capitalize on price movements and market timing. This approach can be more stressful, requiring quick executions and strict disciplines to manage trades. Effectively, for beginners, trading often involves higher risk due to the fast-paced nature of the market and the need for precise decision-making in volatile conditions. The honest truth. Now, the honest truth. Most beginners enter trading with high hopes, but often find themselves losing lots and lots of money. Now, this isn't a reflection of the trading system validity. Rather, it highlights the crucial importance of psychology and risk management in trading success. So a lot of people nowadays, because there is so many people on the internet talking about trading, talking about investing, talking about come easy rich. But some of these people, they don't show you the grind from when they started to learn how to trade and when they're actually making it as a trader. So most of the time what they do is, all of a sudden we didn't hear about this person and they're making millions. All right, some people are slowly showing the journey and they slowly tell us, this is what I did, this is how I got here, and those sort of things. But other people, sometimes you've never heard of them. Then all of a sudden, they're rich and famous and they're trading. So we see it as normal human beings that basically, wow, it's like one night success. They don't show you the grind and the hustle that they started. They lost their account or they lost a lot of money. Then they came back and tried again and they lost money again, and then they tried again. And then from that, basically, how can I say, it's more mistakes and learning from those mistakes. That's why journaling and writing your trades is so important, so that you know exactly what mistakes are you making? What things can you improve? What are the different maybe strategies or companies you are investing in? Was it a good company? Because I mean, sometimes when you invest as well, there's still some risk, because you could choose a company to invest in, but yet that company doesn't do well in the years to come, or it only does well for the first year, and then the rest of it, the rest of the years where you want to take out your money, they're doing badly. So that is why it's so important to do your research when it comes to trading and investing. Research. Always do your research, and practice is what will make you a better trader, a better investor, and of course probably a better person as well. Now, the purpose of trading education. The purpose of trading education. Okay, is the purpose of trading education. I'm gonna get some water quickly because my throat is dry from talking already. I'm coming back. I forgot my water. All right, so basically the purpose of trading education is, while investing is about long-term wealth accumulation, trading serves as a crucial tool for understanding market dynamics. The key is to learn how to trade responsibly and develop strategies that protect your capital while navigating the financial landscape. Now, this is one of the, how can I say, less heard of traders that you hear about in social media. His name is Bill Lipschutz, and now he has this quote that I really like. It's called, "Because I don't trade on dreams or rumors. I'm a fundamental trader. I try to assemble facts and decide what scenario I think will unfold. To walk in and trade on a dream is absurd." So that's why, again, looks like he's, been in the markets for a pretty long time. Trading foundations. So there are different trading foundations. The key concepts to start your trading journey responsibly: market structure, understanding how to identify trends, higher highs and lower lows; risk management, learning to protect your capital and manage losses effectively; position Position sizing, determining how much to trade based on your account size and risk tolerance. Also, beginner strategy, implementing straightforward trading strategies to get you started. So, as I said earlier, we will be discussing different strategies at a later stage. But today we're just focusing on the basics. Okay, so what are the differences? What is the main idea of trading? What do you need to look for on a chart? Those sort of things. So we're going to get into that, all right, in a bit. Let's carry on. Now, let's go through these one more time, because I think it's important that we understand and get this. All right, market structure, understanding how to identify trends with higher highs and lower lows. Then, risk management, learning to protect your capital and manage losses effectively. So there are lots of ways that one can manage risk when trading or when investing. With trading, basically what you can do is you have a stop loss. Some people have a trailing stop loss, or you can, when it's reached a certain area, you can take out profits, or you can move your stop loss to a break-even point, or you could also move your stop loss a little bit further than the break-even point, so maybe you will still profit a little bit even when it comes back, because sometimes what I feel is a lot of people, they always don't take partial profits, but then they automatically move their stop loss to the break-even point, and then it comes back and it hits them at break even. So for me, it's just like, so you actually made nothing, so sometimes what I think I do is I move it. If I'm moving my stop loss to my break even, I move it a little bit more so that whether it comes back or not, I will still be able to profit just a little bit. Also, sometimes it depends when you're trading, if there's news or CPI and those sort of things. Sometimes the volatility is very high, so it could stop you out even in negative because of the volatility. So that's why I sometimes like to put my stop loss a little bit above the break even point, so I might still be profitable at the end. Okay, then position sizing, determining how much to trade based on your account size and risk tolerance. This is so important, because if you don't know how to position size, then what's going to happen is you are going to have maybe $100, and then you're going to want to take 1 or 2 lots out, and in 2 trades you will lose the whole account because you haven't position sized correctly. Now, there are lots of calculators out there that I will show later, how you can position size your trade. Also, because there's based on if you're trading real money, if you're trading prop firm money, so there's different ways that you can position size and keep, how can I say, your finances safe, or your money safer, because this is a really risky way of making money. So we want to minimize as much risk as we can, and that's why we go through stop losses, position sizing, and all those sort of things, so that at the end of the day we can come out profitable. Beginner strategies. So in trading, there are so many strategies. In the beginning, when I was learning about trading, I tried, I think, all of them. I tried quite a few trading strategies. There's been lots of ICT, supply and demand, support and resistance, breakout, trend lines, all of these different strategies, moving average strategies. I tried most of them, so we can discuss what happened with me trying to trade all those different, how can I say, trading all those different strategies, if it was profitable or not. To be honest, they were not profitable. When you start to learn all different types of strategies, it's always better to stick with one strategy when you are trading. Okay, so let's carry on. This again, a reminder, is education. It is not financial advice. Please remember that. Please, okay? It is not financial advice. I don't want anyone losing money that they cannot afford to lose. So this is also why when you start trading and investing, you always use money you are okay to lose, because there's always that chance that you will lose money. So don't go sell your house and then invest the money in something, maybe invest in Bitcoin or in Solana. So a lot of people, maybe they will encourage that, like trade a lot of money. It's okay, don't worry, because you've got to risk a lot of money in order to make a lot of money, which is true. But can you lose that money? Because you don't want to be living out on the streets or not able to survive, right? So it is crucial to understand that the information provided in this presentation is meant for educational purpose only. Always consult with a financial advisor before making any trading decisions, and never invest more money than you can afford to lose. Exactly what I just said, guys. All right, so please, 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 okay, do not invest in money that you cannot afford to lose. All right, so that is the end of the presentation. Let us go into my trading view. All right, let's make this bigger. Okay, so when looking at candlesticks, so we have a candlestick. Let's make it bigger. Why is it not so big? Let's make this one bigger. Okay, so we have two different types of candlesticks. We have a bearish candle, candles that are going down, 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 down. And then we have a bullish candlestick. Okay, so with a bearish candlestick, basically, if you have a look here, we have a high, we have the open, the close, and the low. So for a bearish candle, it opens at the top. And for example, if we're trading the 1 hour, then for that hour, the highest point that it went was over here. All right, that is the highest point. Then the lowest point it went was over here. And then the close was over here. So if we're looking at the 1 hour market, that is 1 hour of action. Okay. Then we have a bullish candle. All right, a bullish candle. Over here with the bullish candle, we open at the bottom. All right. And then we also have the lowest lowest price it was in the 1 hour. And it went up and it finished at the highest price. So you can see this one closes over here at the lowest when it's a bearish candle, and it finishes on the highest when it's a bullish candle. So this is where they're different. So the bearish candle, the open is at the top, the close is at the bottom. With the bullish candle, the open is at the bottom and the close is at the top. All right. Then we're going to talk about trends. Where is the trend now? Okay, so we have two different types of trends. We have let's discuss the upward trend. We have the upward trend. Okay, so as you can see, it's going in an upward direction. Okay, so it's going up, then maybe retrace a little bit, then up, then retrace, up, retrace, up, retrace, up, retrace, up, retrace, up. Okay, so that is the upward trend. Okay, then when it changes, it can go into a downward trend. All right, it changes into a downward trend. So once it is tired, it goes basically, the upward trend comes back in a downward trend. All right, so then it makes a lower low, a lower high, 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 a lower low, and a lower high. Now, so sometimes we can have an uptrend that becomes a downtrend, or vice versa. We can have a downtrend that changes into an uptrend. All right, so those are the basic things that we have learned for today. So we have a downtrend and an uptrend. All right, and we have the candles, right? A bearish candle and a bullish candle. Okay, so let's have a look at the charts. For example, let us put this not in a 5 minute, but in a 1 hour. We have a 1 hour charts. Okay, let's delete this. Okay, so now we have a different chart. Okay, so before we carry on, we can change this chart into lines. Okay, all right, and now we can have candles. So let me say, when you are investing in something, it is better for you to have the line chart, because then basically you can visually see, okay, so over here basically it came down. All right, it came down, and then over here it then went up. So what is the main point of investing is you want to buy over here. Okay, then maybe if you want to be a short-term investor, you want to sell over here. Okay, because most of the time what we all think and what we've all been told by so many other people is that the market goes up like this, right? Higher and moves up, goes down, moves up, goes down, moves up, goes down, moves up for an uptrend, right? Okay, but then for a downtrend, sorry, let's change this color to green. All right, so for an uptrend, but then when it comes to a downtrend, it goes like this. High, high, boom, 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 boom. All right. All right. Change this color to red. But as you can see, basically, as you can see over here, it doesn't look like that. You know, like when you watch any video on trading or investing, and they always talk about higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, higher highs, higher lows. Then lower high, lower low, lower high, lower low, lower high, lower low, lower high, lower low. But when you go into the charts, this is sometimes what it looks like. Okay, so sometimes you'll have higher high, higher high, yeah, over here. Then after that you'll have higher low, then higher high, higher low. Right? So you would have to basically look carefully at the chart with higher highs and higher lows. Alright, so let's us look at what gold is doing, because I like to trade gold sometimes. So when we're looking here, what do we think gold's doing? So it made this plummet, it went down. Okay, it made this plummet down. So it changed character, right? It changed its different types of character. Okay, so now we can either look for buys or we can look for sells. Okay, so that is what we're going to talk about with different strategies. But because for gold now we see here, for example, some people like to invest in gold on applications or physically. You could have bought a nice chunk of gold when it was at 4,000. All right, you could have bought more gold here and then held it. Okay, because it did come down to this part. All right, so it came down here to go up again. So the point is, again, buy low, sell high for investing. All right, but for trading you can buy or you could sell. Okay, if you have any questions, please shoot. If you are not with me or you're with me, if you're enjoying what I'm saying, is it making any sense or not? But I think that's basically all the information I'm going to give you for trading tonight, because I think if I talk too long, then maybe you will get a little bit confused. So that is the basic intro of what trading is, what investing is, and so those are the main things that you need to learn as an introduction and as a beginner. All right, if there's any questions, please let me know in the chat, but otherwise we are going to do something else. Okay, I will be back